And we are live.
All right.
Hello, welcome
Happy,
all. Happy
yeah,
happy what?
Wednesday. I couldn't remember what day it was.
Happy first day of Scorpio season.
um, just like the just like the label talks about, we are talking about market panic, specifically in the private credit sector. Um,
Because yeah, there's a lot of things going on.
yep. Yes, there was, and we're gonna break into it right now. Right before we hopped on, and I'm running late today, so it's been kind of a crazy day, but um just as we were about to hop on, Brandon, I was telling you that we got a freeze warning here in Utah where I live, and it's not the first one that we've had in the West.
Which means freezing temperatures. You had a
Freezing
you had a
temperatures.
warning that temperatures would drop below 32 degrees Fahrenheit.
Yes.
Okay. What
And
temperature is
we've
it right now?
it's warmer than that. I mean, I'm in a short sleeve shirt right now to look a little bit more presentable than I was, but I've been in like comfy clothes all week for about a longer than that, about 4 or 5 days. Because it's cold now. It went from being like 70 to cold overnight.
Hence the fall season and just finishing
Mhm.
Libra season, now getting into Scorpio season. You get more of that fixed
Um,
fall.
well, what's funny is it feels like,
The markets
at
are
least,
freezing too.
yes, and it, it,
So
it feels like we missed fall altogether. So we went straight from the September scaries to a freeze out. And for me, the evidence of that is what's happening in private credit. Um,
yeah.
and I guess to preface this before we start, my personal opinion. So obviously, none of this is financial advice, investing advice. Um, there's a strong argument to be made on both sides of the private credit market. One is that like $60 million being written off by Zions Bank just isn't that much money. Um, and the other side is that sure it's not that much money, but because these are all private debt instruments, we have no idea what's actually happening in the market. Reporting rules are opaque. They don't have to report certain things that publicly traded debt have to report. And in every case over these past 2 weeks, and now my guess is with Prima Lend, it's going to be the same thing. It's been a
So
case of fraud.
yeah, so let's start with what we do know. So I think what I saw was a few of these regional banks that came to light that have these loans that are essentially like these cockroach loans that are
Hmm.
necessarily not doing anything, which is kind of symbolic of what was happening in 2008. The whole financial crisis was started on these kind of like BS loans of people that could never
Right.
pay them back. So yeah, what do we know now, and how is that kind of bringing up some old wounds, perhaps?
So it feels like 2008. So for people who don't understand it, I didn't know this until my last year of my undergrad. What was going on in 2008 with what are called consolidated debt obligations, which is basically just a whole bunch of debt instruments wrapped into one big box. And what was going on is all of these loans, even the private ones, are rated. They're
Yeah.
rated by agencies like Moody's, S&P, and other places around the globe and other countries.
I'm
And
thinking back to the explanation they gave in The Big Short. It's really funny. It's like you
yeah,
take all these shit loans and then you pack them into a big box of shit. That somehow makes all the like thousands of shitty loans add up to not a shitty loan thing.
no, and that
Funny movie if you ever saw it.
people go watch The Big Short. But that's exactly what I was going to get to. So typically, how these instruments work is you rate them based on reliability, how likely are they going to pay you back, interest rates, all these other factors go into these really robust models. In 2008, a lot of these mortgage brokers found a way around that where if they stuff a bunch of crap into a box by volume, it looks like a AAA instrument. It looks like investment grade
Still
when in
doesn't make
fact
sense, but
it it's one of those things. I think
yeah.
George Gammon said it best where it's, you know, sure, this thing that you're doing is technically illegal. That isn't going to stop a bank from finding a way to get around it if it's a $3 trillion industry, which is exactly what we have going on right now with asset-backed securities. Instead
Yeah.
of mortgages, it's burritos and accounts receivables and all sorts of random nonsense that have been. pledged 2 or 3 or 4 times. In all 4 of these cases, back to what you were saying of what's going on, we had 4 major events happen in the course of 2 weeks. It might have been a little bit longer, but,
Of the
um,
last 2 weeks?
yeah, it's been like a month. 4 It's probably closer to a month, to be honest.
Oh,
I don't have exactly when First Brands went bankrupt when they filed, but within the course of a month, Tricolor and First Brands both went bankrupt. Zions Bank and Western Alliance both wrote off millions of dollars of loans as losses, and all 4 of these have the same common denominator of re-pledging their collateral to tons of different institutions. How these loans worked is they're what's called asset-backed securities. For people who never heard of them before, they do exactly what the label says. You take an asset, whether it's real estate, loans, U.S. debt securities, stock, doesn't matter. It could even be things as simple as like accounts receivable, saying like, "Hey, we will receive this money," and you loan it out. You borrow against it with the idea of give us this money now, and we'll pay you back from this asset
and if
at
or if
some
we
point.
or you put an asset up as collateral, like I'll borrow this
Yes.
money. If I don't, you have the right to liquidate this asset.
Right, exactly. The problem is if you have a case like First Brands or Tricolor where they lent the same collateral to multiple
To
different people.
yeah, like 5 people, they all have a claim on the same collateral, but obviously only
Right,
one of them can take any action on that.
exactly. And what's even worse than that is with a lot of these asset-backed securities were based on what's called accounts receivable, money that hasn't been collected yet.
Yeah,
And so
is
basically, if the company goes bankrupt, that goes to zero. And it's now not worth anything. That's one of the underlying kind of dirty little secrets behind all of the court appearances now in the lawsuits of different lenders saying, "Hey, First Brands, you owed us $2.9 billion. Where is it? It's gone." It was based on money that didn't exist yet. It hadn't been
right,
collected. And now that the
exactly.
company's gone, it's just that security isn't worth anything anymore. There's
Hmm.
nothing behind it.
Indeed. And so these are all kind of major players in the regional banking industry, I believe.
So, not all of them. Western Alliance and Zions Bank are. With Tricolor, it was, and this is kind of why I'm saying that like the money's gone. Tricolor was an auto dealership that also did financing, and they would lend money to really high risk borrowers. So we're talking about people with low credit scores, illegal immigrants, undocumented individuals. They basically finance these cars at crazy interest rates. We're talking credit card rate of interest rates, with the idea that they're going to pay it back and they're going to get lots of money from these cars. Well, if you're an illegal immigrant that just got kicked out of the US, why are you going to pay your loan back?
Exactly. You're not
If
even
you're
in the same
someone
country to be able to pay your loan back.
Right. Or if you're someone who's struggling, why are you going to pay your car back? You know, if you have to choose between your car and your rent, you're going to pick your rent every time
Right.
because you need a roof over your head. You can walk, you have legs, you have public transit, so they're just not going to pay him back, which is exactly what happened to Tricolor. First Brands, it's a little bit harder to parse out as far as I can tell because they were an auto parts distributor and they took out a whole bunch of they took out a whole bunch of loans to expand. They were doing at least reasonably well on paper. And it looked like what they were doing is they were basically taking these receivables that they hadn't gotten yet. So these people who were going to pay them for the parts that they sold to them that hadn't paid them yet, and using that as collateral and saying, when these come in, we'll pay you, we'll pay back our loans. And if we don't, you get these receivables, you get this money instead of us. And they ran out of money. It was like overnight, the money was gone. And so now you have all these different banks that are trying to collect those accounts receivables, but they were all the same accounts receivables.
Hmm.
So that's what's going on. And like I said, a new one came out recently called Prima Capital Partners, who just filed for bankruptcy. We'll get to that in a second.
And yeah, I keep seeing the word kind of like
Yeah.
fraud pop up. So it's, I guess, if you,
Yes.
promise the same collateral to many different ones, that's
Mhm.
essentially a form of fraud.
Yeah. Misrepresentation is illegal.
Right, right, exactly.
And with both Western Alliance and Zions Bank, it was a very similar case. It was a group called Cantor Group who does real estate investing. And they pledged, I don't know if it was commercial real estate or loans against commercial real estate. They pledged that as collateral to multiple banks. And when that real estate investment fell apart, there's no money left. And so what Western Alliance and Zions Bank had to do is increase what's called their credit loss provisions, which is banks simply say, hey, we loaned out this much money. We're not going to get this percentage back. And so they increased those by somewhere around 50 million, I think it was. And Western Alliance actually sued the investment group because of it.
Damn.
My
Yes,
guess
sir.
is, go ahead.
So yeah, I was just saying that I'm gonna bring it up soon, but being an astrologer, I'm tracking a lot of cycles with particular Pluto and Aquarius around this time. And this kind of everything that's happening now is kind of in light of Pluto stationing direct last week. Pluto was going
Mhm.
retrograde, but now it's moving forward again. So it's gaining all this momentum. That kind of manifests in a few different ways, one of which being the No Kings protest. But
Yeah.
there's a lot of financial tie-ins as well.
Hmm.
And I believe you remember in 2023, we had quite a bit of regional bank issues as well. That was the
Yes.
first time Pluto went in Aquarius.
Mm.
Also goes farther back. So Pluto first went into Capricorn in 2008. That's when the financial crisis was. So we kind of
Mm.
have this precedent that Pluto changing signs is kind of a big deal. So
Right.
then the first time Pluto entered Aquarius was from March to June of 2023. That was around the time that AI was coming out, ChatGPT was everywhere. So Aquarius is very tech heavy. Bitcoin, cryptocurrency, as well as AI are part of the storyline as well. But so is like the banking system and the power of the people and these different aspects and tie-ins to it. So, how do you see any similarities between the bank failures of 2023? What was that, spring 2023, and now?
I do. And I'm going to sum this up in a quote from Warren Buffett, actually. And I'm probably going to butcher it, but I think it sums this up very easily. Until the tide rolls out, you don't actually know who's swimming naked.
Yeah, good quote. Good
And
quote.
so in all these cases is kind of a background of what's been going on. Um, During times of easy money, which is what happened
Since
both right after
2008, and you have the
COVID.
quantitative easing and everything. Yeah, and then even more so
Exactly.
in 2020.
Um, when you have a lot of money that rushes into the system really quickly, inside the actual asset based system, things are going off like gangbusters. You have stock markets going up. People can loan money at basically
Right,
0% interest.
right.
And so you get this crazy nonsense going on like, hey, I'm going to loan out my collateral to 10 different banks because I'm going to get the money back, you know?
Exactly. And if the cost of borrowing is 0%, there's no
Right.
cost of borrowing. You borrow money, buy the stocks, all the stock market gets propped up, but it's
Exactly.
not really legitimate, or like it is if you consider the current system legitimate.
Right.
But as we're seeing now that
Right.
we're seeing the tide roll back, started
Mm,
the yeah, you see who's swimming naked. They get exposed.
exactly. Um, and to put this into perspective, all of this has to do with poor oversight. Is really like the fundamental layer of what's going on is poor oversight and poor understanding of risk or neglecting that risk.
I was gonna say, or greed, and like,
Yes.
because it's kind of like, because some of the things I've studied is like, this is kind of how the banking system operates. Like 2008 was a year in which a lot of banking industry malpractice was exposed.
Hmm.
But like, I mean, you're not like they bailed out like the big players, but they used taxpayers' money to do that. I
Yep.
just remember some protest signs being like, bail out the people, not the banks.
Yes.
And it's like, we're still under that same system. Like, not that much has
Hmm.
changed in terms of how like banking operates, except bailouts became like more institutionalized. So ever
Yes.
since 2020, especially, they started doing like these pre bailouts. and the government gives banks money even before they bail out, even before
Yes.
they need the bailout, when there's at the initial signs. So
Hmm.
you can kind of see how, I mean, to go off on a bit of a tangent, something that's been coming up for me lately is just how money is energy, the whole spiritual side of money and stuff like that. And you can kind of see that the people in power, the people in institutions and all that, you can see how they are directing this energetic money resource into bad debt and things like that. And then you can see how that just creates this current environment of so much debt and cost of living crisis that we're currently living in. So you kind of see that parallel of like cause and effect that I'm
Yeah,
seeing.
and I'm actually going to point it back to your comment about greed.
Yeah, yeah. Let's go back to that.
I'm going to shoot a couple bullet points really quick of what happened as far as I understand it from like a forensic side of what caused these bank failures. And
Oh yeah,
it's the same thing that was happening in 2008. It's the same thing that was happening in 1921, 1929. It's greed and a misunderstanding of risk. So with Silicon Valley Bank, what happened is with banks, they have to do what's called mark to market securities. Basically, at the end of every period, they have to go to the regulators and say, this is what our securities are worth. That's the problem when your entire balance sheet is US securities and adjustable rate loans.
what's the problem?
Because when you have either adjustable rate loans is what's happening right now with them, it was specifically US securities.
Um,
Um, when rates go up, your securities go down.
right.
Or I might have that backwards. So the point is, as rates and the value of U.S. securities have an inverse relationship,
Yeah,
and with Silicon Valley Bank, they didn't have a chief risk officer that was looking at this. I talked to an old coworker of mine who's since left my company, but he was actually working for the Federal Reserve, and they were under an investigation for malpractice, specifically for this issue. So they were not marking they were not marking their securities to market properly, their reserves. And then overnight, when interest rates changed, it collapsed. And they went to the Federal Reserve and they said, we're underwater. We cannot possibly pay back everything that we owe to our borrowers, the depositors, not our borrowers, our
yeah,
lenders, the depositors, with the reserves that we have, according to the rules that you set.
yeah. And
I
then
don't Go ahead.
didn't most of those players get pretty much like a bailout? Remember the Federal Reserve opened this like what's it called? Like OTC, like overnight
Mhm.
transaction something or other.
Yeah, so the Federal Reserve came in and kept it from failing.
Right.
They broke FDIC rules
Right.
because on the
But
other side of the United States, New York Bank failed as well,
yeah, yeah.
for similar reasons. And so all of a sudden, you had millions and millions and hundreds of millions of dollars that were going to disappear. Because you have to
Yeah, that
remember
were
that
at risk.
with fractional reserve banking, they only need like to have 10, like 9, 10% of their reserves on hand at any
Oh my
point.
god.
Most
But
of
yeah,
your money in your bank account is not there.
I
You
remember when
still
I
own
learned
it,
about that.
but most of it's not there.
I mean technically the like the bank owns it. Like the bank's holding it for you and it's like technically in your name, but like yeah, the money the banks like loan out most of the money. So it's like
Yes.
most of the depositors' money is not at the bank.
Yes.
Man, I remember when I was
And
first learning about fractional reserve banking, I'm like, that's crazy.
mhm. And it
And
goes all the way to the top too. Our central bank does
exactly.
it as well.
Exactly. They just loan everything out. So you can see how debt gets created through loans. Like,
Mhm.
most people have like their mortgage loans through their bank, and that's kind of part of the risk of all the basically the whole regional banking industry at risk is that it kind of affects a lot of everyday people in that way. But I
Right.
forget where I was going with that.
Well, before sorry to cut you off there, Brandon, but
Yeah, yeah,
actually,
take it over.
Jeffrey Glessman, who just joined. So Eamon
Oh,
O'Malley and Jeffrey, thanks for joining us.
thank you.
Um,
Hello, hello.
Jeff said, and he has a history with high net worth client investing, and he said most banks have less than 35,000 in operating money daily, kind of in their cash drawers. So that puts into perspective: is Silicon Valley
Yeah.
Bank Um, with Silicon Valley Bank, that was the SaaS and Silicon Valley
Yeah, that
Bank.
was a
That's
very
where all the SaaS founders kept their money. It's
yeah,
where
that
all
hit
the
the tech
startups kept their
sector
money.
particularly hard.
So, and Jeffrey actually made another comment. He said, if you want to make a withdrawal of size, you need to call ahead.
Right, because
And
they don't
I
have the
hate to
money.
say it, they don't have the money. So the reason why they have to do that is they either have to go and call a loan or they have to go to the Federal Reserve and say, hey, we need cash and we need it now.
Yeah.
Um,
And I remember some people in like maybe my parents' generation like didn't necessarily see like a big issue with like fractional reserve banking, talking about a time like 2008 or even like the Great Depression. It's like in my mind, yeah, like fractional reserve banking is a cause, but like
mhm,
someone else might have the perspective like something that spooks people to withdraw a lot, cause a bank run is what causes a depression, recession like that.
mhm,
And two things, of course, can be true at once. It's like
yes.
obviously if we weren't a fractional reserve system and people could get their money when they needed it
Mm.
or wanted it, then there wouldn't be an issue.
No, 100%. And, now that we're sitting here talking about this, because I'm going to hop back forward actually to what just happened,
Yeah, let's do it.
because it's connected to this. But now we're dealing with what's called adjustable rate loans, where these people like Tricolor and Zions, they were dealing with these loans that don't have a fixed interest rate. It moves with the market, um, which is great if you're getting the loan at 2 or 3% interest rate. And it's bad if it's 7. And that's basically what's happening here is you had these companies taking out all this debt thinking, we're getting it at 1%. This is great. This is great. You know, the Federal Reserve said that things are going to be fantastic. We're going to have this recovery. So we're going to get all this new business and pay back our loans. Inflation rises. Things aren't going well. The Federal Reserve raised interest rates to 7. Now your payments have doubled
Yeah.
and you're done. And because it's a loan, that money doesn't exist yet. This is the thing that I always tell my friends is that, and Richard Byrne talks about this too. I think he hopped on with Tucker Carlson where he made it very clear. Banks create money by creating loans that will bring money back in the future.
Yeah. They more
That
like
that's
the process of creating money is more like creating debt,
mhm. No, that's
essentially.
how money is created in our
Yeah.
modern system. Is we don't really turn on the money printers
Yeah.
in a lot of countries anymore. It's the Federal Reserve sells debt. Banks create the money to buy that debt and then lend against it
Yeah. I'm
to other people.
I remember talking about this in the whole understanding bonds. It's like a bond is a debt instrument. The same
Mhm,
thing, like the Federal Reserve will issue bonds. And if you buy a bond, you loan your money to the government, and then they promise
mhm.
to pay you back. But what do they do next year when they need to pay you back? They just issue more bonds. It's just debt on top of debt on top of debt. And so
Yes.
I've always talked about like in a power to the people kind of sense. If you don't want to support this debt heavy system, don't buy bonds.
Yes. And the problem with that is, and this is why, like, I actually don't agree with the debasement trade argument. Because if there was really an institutional fear that the US dollar was going to collapse quickly, because right now it's dying slowly. It's
Right.
slowly losing every year, but it hasn't been a crisis for a long time. If it was a
No,
crisis right now, yields would skyrocket,
of course.
and they haven't.
I think the theory is more of a gradually than suddenly type of thing. But
Yeah.
yeah, wait, let's take a step back. What's the debasement trade all about? Like I do know, but for the audience.
Yes, this is Wall Street's newest ploy to get you to give them more of your money for
Oh, is
risky
it?
investments. Recently, you may have noticed in the financial media, if any of our listeners read like Forbes or the Financial Times, Reuters, they're talking about the debasement trade, which is the idea that the US dollar is going to lose a ton of value in this next quantitative easing cycle.
And that's why gold's been doing so well lately.
Exact. Well, you could.
Print it
Thanks
up.
for the comment, Jeff. Jeff is a savage. I love talking to him.
Money printer go burr.
Exactly. But the way that the logic always seems to go is this idea that fiat money has nothing behind it.
Yeah,
Governments just
ever
print
since.
money.
Yeah,
And at some point, they can't print it anymore. The balloon runs out of air. And
Well,
with
it's
the US,
almost yeah. Well, it's almost like it's like the system like used to be on gold back in the gold standard before the
Mhm.
1970s. But ever since then, it's been more of like a debt-based system. So it's like
Yes.
it's kind of like you could say it's backed up by debt and it's backed up by the good faith of the US government. Also, like,
Mhm.
the US having the strongest military power in the world.
Yes.
So you could say it's backed by those things, but ultimately, from my perspective, it's backed by the faith of the people and the word of the government. So it's like if we
Yes.
believe in a system, then it is a thing. But until we don't believe it, then it will cease to
Mm.
be a thing. But yeah,
Right.
keep going with your thing.
Well, and it's not even just, the faith of the full faith of the US government. The reason why specifically financial, like
Yeah, yeah.
international financial institutions buy US debt is because the US federal government has the legal right to tax one of the most valuable tax bases on earth.
Mm.
That is why they buy it, because they know the federal government is never going to default. They're going to continue to play games and they're going to continue to raise taxes to make it look like the debt's going to come down someday.
Except Moody's and the debt people who rate the rating agencies
Mhm.
downgraded the US's debt credibility,
Well, and
credibility to repay their debt.
that's part of this debasement trade narrative that's going on. And that's what I want to make this clear. This is a narrative. The data does not support this.
That
And the
doesn't
narrative
support.
is that eventually people are in other countries are selling off US debt because they hate Trump and they hate tariffs and they think the US is going to fail. So you should sell all your bonds and put it in BlackRock's Bitcoin ETF is the basic argument. Or you
Or,
should put
or
it
gold.
in GDX. That's the whole idea. Um, what that would look like in a behavioral level in the financial markets is yields rising. And they did very briefly because there was a short window where we didn't have enough buyers at the short term auctions. But that's gone now. Yields are coming down because everywhere else on earth, the thing is that people forget here in the States is we have the most dollars. We have more dollars than everybody else. So if we're struggling to get financing, the rest of the world is cooked.
Oh yeah, we also have the money printer and the ability to create dollars. So it's like
Right.
a
So
resource that will never. Yeah,
no, yeah, exactly. And Jeff Snyder, Eurodollar University, does a fantastic video series on this where they talk about the reason why financial institutions overseas, 9 times out of 10, the reason why they're selling their US debt is because they need dollars. They need dollars for trade. They need dollars to pay their employees. They need dollars to pay for tariffs.
yeah,
They need dollars to invest in the US, and they don't have them. They're sitting on all this US debt in their central bank reserves, and so they have to sell them. Now, sure,
mm,
someone like China might try to sell it in a futile attempt to hurt the United States,
right, right,
but
like
9 times out of 10, that's not what is happening. People need dollars.
right.
There is no other alternative.
The reality is that the U.S. dollar is still very much entrenched into everything about how the financial system works and operates.
Mhm.
Until it
Exactly.
like isn't so core and fundamental to everything about how the system works, yeah, the dollar can't like lose value that dramatically because, like
Mhm.
you said, there's it's a demand factor. People need dollars to carry on various aspects of participating in the economy and the financial system.
Right. And so my argument on the other side, to your point about gold, is in my world, my opinion, what I see in the gold and the Bitcoin markets and also silver is what's happening right now is a combination of two factors. And maybe you have a couple people on the sideline who thinks the debasement trade is real and that's what they're doing.
I sort of think that the debasement trade's real. It's just very accelerated from my timeline. Like I think the
Uh
dollar's probably cooked by like maybe more like 2050. Like yeah, it
yeah.
won't happen that fast, but I do agree with the dollar losing value.
It's more a combination of two things. One, excess debt. So this is the thing. I don't know if you were on Twitter like 2 or 3 weeks ago. Oh, it was 2 weeks ago when all of a sudden the S&P 500 dropped like 6%.
Oh yeah, was
Um,
that Friday, right?
yeah,
I
Bitcoin did
remember that
much
day.
worse. I think it dropped $2,000 on the day.
Because Bitcoin's a little more volatile than the stock market, but
Yeah, what happened, and this goes back to what we're talking about with Tricolor and Silicon Valley Bank and all this, is all of these traders and all of these institutional investors that are really day traders with a computer a really nice computer, ratcheted up on the debt. They took out tons of margin. I think I don't remember if it was one of the dexes on the crypto side was allowing their traders to take out 500x of leverage so they could trade 500 times more money than they had.
Yeah, crazy amount of leverage. That's always what you see
It's
on those
insane.
big swing days. You see, like,
It's
the market.
obscene.
It is. The market will take a little bit of a turn, but then all you see all these liquidations. Then it just leads to a
Yeah.
cascade. Ultimately,
Yeah.
like, it's good for it because you flush out all that excess leverage.
Mhm.
But yeah, it paints for some pretty volatile days.
No, that's 100% true because if you take 500% leverage and your positions drop 20%, you're out of money.
Yeah, it's not.
And so
It's borderline gambling at that point.
it 100%. And so that's part of it.
Yeah,
Is people took out a whole bunch of leverage because they were sold this idea of, oh,
you can make so much money if you like 500x your. But yeah,
which,
then you turn investing into a gambling game.
yeah. And that's exactly what happened in 2008, by the way. In
Yeah.
2001 is all these people who, left their day jobs to become day traders and Forex traders. Sound familiar?
Oh,
Yeah. Um, so you have that narrative going on, which has been really strong for several years,
I
especially.
I
Go
mean,
ahead.
I've been seeing like just gambling culture in general kind of like take a rise. And that feels like a natural response to
Mhm.
like various cost of living crisis things that go on. I mean, there's
Yeah.
part of it like the psychology of like someone who buys like lottery tickets every month, like hundreds of dollars lottery tickets every month. Whereas if had they put that money in a savings account, they'd have a really decent savings account. But since they
Mhm.
just buy lottery tickets, like it's more like they don't believe in their ability to like become financially free, etc., whatever goal you want to put, unless they can
Yeah.
like win the lottery or something. So then you get into these
Unless someone
leverage
else does it
games.
for them.
Yeah, something like that. And so that's almost like a symptom of like where we're at right now with so much like financial pressure on everyday people and the need to take on these like lottery slash gambling moves to be able to have success in today's economic environment. And so that's where I see part of like that trading of with excess leverage in whatever stock market.
Yeah.
Gambling
So
games played in the stock market too.
no, and you're 100% right. And there's actually one way we can prove that very, very quickly is these new betting platforms. How
Yeah.
much money are they getting?
I mean
And
now
so I
that
was just curious.
yeah,
Go ahead.
now that like football's back and I'm watching some football, it's like all these commercials are like sports betting, sports betting. I'm like, gosh, why is like
Mhm.
betting and gambling like everywhere?
So
And that's
this is
why.
no, yeah, and this is a total squirrel moment. This is not what we were supposed to talk about today, but I think it's important. I just Googled how much money Kalshi got. So Kalshi's the betting app. It allows you to sports bet. It allows you to trade on weather and elections in other countries. Which, by the way, this stuff always kind of existed, but it was in the background. Like
Yeah.
we had people betting on the 2016 U.S. election in
Yeah.
other countries,
But that
but
wasn't very popular. But now betting on
no,
everything is popular.
yeah. So Kalshi in their Series C funding round, which we won't get into, but it's VC funding, um, they raised $185 million. They got $185 million for their equity, and it raised their valuation to $2 billion. That tells you a lot about what's happening in the world. Is you
Yeah.
have these basically glorified gambling casinos, online casinos worth $2 billion, which before there were like what, a handful of casinos, like 10 maybe, probably even less. It was like probably MGM and like two or three others,
Yeah.
Trump Tower maybe, that were worth that. And now you have a platform with no brick and mortar location, no token cage, none of that, that is worth 2 billion.
Indeed, shows you what society is valuing at the current moment.
Right. But that's the part of this, in my mind, that's part of this K-shaped economy that we're experiencing as well. This idea that asset holders are doing extremely well right now.
Right.
The rest of the economy is not.
Right.
I think there was even an FT or a Bloomberg analyst who came out and basically said The AI trade has been growing for 2 years. Everyone else has been flat or shrinking. So
I mean,
we,
Bitcoin's been doing well, but yeah, yeah.
yeah. And that's because the smart investors are like, this whole situation is crap. This is kabuki theater. So I'm going to go invest in gold and Bitcoin, which was the other side of why I
Replacement
think
trade.
it's the other side of why I think those assets are going up is you have people who are gambling
Yeah,
and people who look at the US stock market and other stock markets around the world and are calling their bluff.
exactly. Well, I think we talked about one of the last live calls we had, but yeah, I mean the kind of what we're talking about of the money printer and debt, and then if you borrow money and then you what do? You go buy the stock market. That's if
Hmm.
you have money. So if like money gets
Right.
created through debt, that is new demand that can go into the economy. But asset holders are usually a little more well off that they're not buying things like food and stuff. So when you
Hmm.
see people that don't have the money to buy food, that they get the ability to buy food, yeah, you'll see that food start to go up. But if you see someone who's already like taken care of in basic human needs, then they put their newly borrowed money into assets. And so
Yes.
we were talking about how the S&P 500 is essentially just like you can see like a direct correlation with the money printing that goes on through the debt
Hmm.
creation. So yeah, it's kind of like, is the stock market really even valuable? And especially now that you see that mainstream advice is like, oh, just buy index funds. Like
Yeah.
it's gotten too mainstream that it's not actually what's the right word? I don't know the right word, but like valuable or even like the best return on investment.
Well,
But
and it's hard to say.
it's also like what is the value proposition of the stock market?
Right.
You originally buy stocks because that's ownership in the company, but no one like partakes in any active management in the running of the company of the stocks they
Mhm.
buy. It's more so just for their own economic self-preservation. Savings account essentially. Dollars is what you
Yes.
buy with. The stock market is like your long-term savings account. But
Right.
if it's not even doing that job well, and Bitcoin and gold can do that job like 3 to 5x better, then it's like, maybe diversify your portfolio a little bit. And yeah, that's
Right.
kind of where the smart money is going. And
Yeah,
yeah,
and
yeah, you got
that's
you.
not just you who's saying that either. I mean, most of the independent analysts I listen to, even all the way up to Chris Whalen at Whalen Global Advisors, are all saying that. They're like, yeah, we're piling our money into gold and Bitcoin and silver because Tesla's trading at 119 forward PE or whatever it's at right now. And we don't believe that Tesla stock is worth
Yeah,
119 times its earnings.
yeah, overvalue because it doesn't even have anything to do with the money. It's like people who are like, oh, my money's losing value. How do I like not have my money lose value? It's like, oh, Tesla's doing pretty good. It's like that could
Yeah.
get you money. It's yeah, it's pretty crazy. It's crazy for me
Yeah.
too, just because like thinking back to like when I was like, it's thinking crazy for me too, because I was thinking back to when I was like 11 or so, when I first found out about inflation. I was like, what? What do you mean my money's losing value? And
Mhm.
I like that was kind of the biggest, like maybe like issue in my life. Where I guess I just from a young age understood that like money and things of that nature were going to be my main bottleneck
Mhm.
in life towards getting the life I want, living the life I want.
Yeah.
So inflation was always at the root of my concern. Inflation meaning prices going up, but it's mainly caused by the dollar losing value. So I'm in that same boat, right? So I'm like, how do I save my purchasing power so that I get wealthy over time? Because you
Right.
can't save your way to wealth because the money's losing value. And so the stock market was, yeah, my first answer to that.
Mhm.
But it always felt like a half answer. It's kind of like splitting the functions of money between cash and stocks.
Mhm.
Like I can't buy things with stocks, but I can't like save with dollars. So you kind of
Mhm.
have these functions of money like split like that. But looking at studying the history of money really put everything into perspective because gold used to be used as money. It preserved your value over time, but you could also use it to buy things. Now it didn't become very good at that job because it's not very divisible and it's heavy and other limitations that gold had.
Right.
So then studying Bitcoin was the thing that really put everything into perspective because it has all the strengths of gold in terms of preserving wealth over time and getting more valuable. It's also like instantly transferable, move across the world, take it across borders. You don't even like need to carry it physically. I'm like, oh, okay. But also looking at the dollar, like I could see how the dollar would eventually like turn to zero. You kind of see that in every government controlled currency that has ever existed. In fact, a lot of them
Mm.
were created so that they could fund war. It's
Yes.
essentially why it's essentially why governments create their own currency so they can fund
Yeah.
war and other things like that of that nature. So for thousands of years,
Specifically,
humanity has
unlimited war.
exactly. So for thousands of years, you would always see that when a government controlled currency failed or ended or went to zero, humanity would fall back on gold. But we kind of already ran that course with that, and especially the digital world, Bitcoin's kind of primed to take over.
Mm,
So, like, I'm at ease where I'm at now, just because, mainly because of Bitcoin. But like,
right.
you can kind of see the end game with the dollar based on the various
Yeah.
things that it's propped up by debt, and that it's the debt itself is just making humanity and society worse over time. Like, it's like, is Gen Z the first generation that's worse off than their parents because of the debt that has been gaining compound interest since the 1970s when we ditched the gold standard? So that's kind of, you follow that track. It's like society's getting worse over time because of all this giant debt burden. So how do we reverse that course? Essentially need to reestablish a new financial system. And that's what Pluto and Aquarius is helping humanity with.
Mm. And what's going to happen? It's very funny. I know we're running out of time here, but
Mm.
there was actually there's a headline that came out that actually talks about what I believe now as I've been learning more about it, and especially with the rise of things like real world asset tokenization. Shout out BDIC
Yeah.
and Jim McCarthy who are working on that right now. Um, and the rise of stable coins and more crypto assets and Web3. Where I see this going is you build out these big crypto infrastructures and they move capital very, very quickly. You know, you're not waiting 7 days to move money overseas anymore. You're waiting a couple seconds.
Mhm.
Or with Bitcoin an hour, which even then is really fast. Um,
Humanity will
what
never limit.
happens is once this actually gets into full swing, once we have this infrastructure built out, especially once the payment endpoints are built on these crypto chains,
Hmm.
and you can use them as cash instead of as collateral to get cash to then spend.
Exactly.
Um,
That
collateral
is,
moves. Go ahead.
I'm just saying that's basically like the marriage love child of like cash, credit card, and stock market.
Hmm.
Like, roll all those things up into one. That's what
Yeah.
you're talking about, essentially.
Well, and then a bunch of these debt regimes come crashing down
Exactly, because it's like,
because
what demand is there for a system that like just no longer serves humanity?
right.
Like, for something to like make money and be valuable, it needs to
Mhm.
like serve humanity in some way. And it's like,
Yeah.
the base of what we've been saying this whole time is that debt no longer is serving us.
Mhm.
It's hindering us.
Yes, and debt was I personally believe debt was the answer originally when this system was created.
Yeah.
Um,
Yeah, the
because someone
1970s.
someone needs to create liquidity,
Exactly.
and if you only have a finite number of assets at any one point, you can't really use that by itself, which
Yeah.
is why futures and things were created to get around that. However, if you're in a regime that has doubled and tripled and quadrupled down on that, like say China, to the point where you have capital controls involved because all of the high net worth individuals are onto the game and they know what you're going to do. So they're trying to get out as quickly as possible.
Also, look at the history of like price and capital controls. It never went well.
It never goes well.
No, no. Government
I
trying to
think I,
control prices and things of that
yeah,
nature never turns out well.
I think I caught some flack on Twitter for posting four separate cases where, floors and ceilings on prices end really badly since the Trump administration's talking about doing that. Um,
Do they have like a historian or person in there? It's like, that's not a good move, and there's so many examples as to why that's not a good move. It's literally never worked. But yeah,
Yeah, and we could talk an hour. We could talk another hour about this,
yeah,
but
yeah.
really, they're claiming it's to stop China
Oh, of
by
course, they'll use
creating a
whatever
floor on
reason.
prices so you don't get um you don't get you don't get product dumping in your economy is what that's their narrative.
Oh, of
The
course, let's
real
control our
solution to
economy
that,
because of China. Yeah, yeah, you go.
yeah, No, but the real solution to that is not setting price floors. It's going into your own
No,
economy and slashing regulation. You go into, say, like the electronic industry, and you say, yeah, so all this stuff that you had, these regulations about green compliance and packaging compliance, it's gone. Go nuts. And the other economy will get absolutely shattered because they can't compete with one of the best manufacturing bases on the planet. Now, ours is, I hate to say it, ours is falling apart because for years we've been throttling our own companies with green regulation and all this red tape. If you get rid of that, they bounce back fairly quickly.
yeah,
You'd be surprised.
yeah.
Um,
Economy is resilient that way.
that's the creature of the market because I believe that markets behave like a living creature.
Yeah, absolutely. You can see
The,
like the psychology reflected in the market. It's this
no, yeah,
interesting reflection of like individual versus like, I mean, the market essentially represents the collective, but
no. But the creature of the market, it has one job. Its job is to connect buyers and sellers as quickly and as cheaply as possible. That's
right,
what it does.
right.
And if you leave it the frick alone, it will do that.
Yes,
And
exactly.
I think, to wrap it back around, I think Web3 is going to do that. Assuming it doesn't get buried in red tape, which it might. But
Well,
if
I
left to
mean,
its own
there's
devices, it will do that.
exactly, and I mean, there is a part, an element of that that is like if I hold my Bitcoin, my coins, my stuff, it's like I am in control of it. So it's like it doesn't even matter what like government red tape holds. It's a peer-to-peer electronic cash.
Hmm.
Peer-to-peer meaning you cut out the middleman, the bank, and
Yeah.
the tools of power and control. So there's a very
Yeah.
good prospect and possibility of that.
Hmm. And it's also why people like Beijing are putting in capital controls for stablecoins right now. Same issue. Because if China was to allow stablecoins to develop freely and without their control, all the money would leave China
Exactly.
pretty
Oh
much
man.
overnight.
Exactly.
As soon as that system is up and running, it's going to make capital distributions out of China into other places as quickly as it can. It will shut the internet down
Well, yeah,
with
because if the
denial of
country
service.
yeah, because if the country doesn't have control of the money, then it's like what's
Mhm,
stopping me from just leaving to another country and participating in another economy? And that is
mhm,
part of the freedom movement we're moving to. I mean, yeah, my brand is like the money nomad. I like, travel between countries and borders, and the economic realities of that is kind of blurring lines of like borders and capital controls will, if they're not managed right, will push people away and people will have greater
mhm.
control of their economic prosperity that they'll be able to just take up and leave.
Right, exactly. Anyway,
About time for us to wrap up.
yeah, we're wrapping
Anything
up.
anything else that you wanted to say that we didn't get to or
No, if I could do a little plug, I'm
no?
thinking very seriously, and I'll make a post about this later when I actually have a mock up. I'm thinking about creating an I Survived the September Scary sweatshirt. So if people
I
want that,
survived the September scare. Nice, nice. I like
it's
the
going to
vision.
have a big old graph of the S&P 500 crashing down.
Nice.
It's going to be great. So I'm thinking about doing that. If you have not subscribed to Wealth and Wisdom, there's going to be some great stuff coming out very, very soon. We're going to be covering, we're actually going to be covering Representative John Kennedy's comments this week from a hearing that he did about the future of crypto infrastructure in the United States.
Yeah, we didn't even
Um,
get to any of that. There's been
no,
some developments there. Next time,
it's
I
so
guess.
much has happened in the course of 3 weeks where we ran out of time.
Yeah,
And
yeah.
of course, follow the Money Nomad. You put out some fantastic stuff.
Thank you, thank you. Yeah, today's Wednesday, so today's my newsletter day. I just published an article a little few hours ago, and yeah, I kind of did a deep dive into part of what um part of what the energies will experience through the fall, but also reflecting on everything that's happened the couple weeks of Pluto's influence and the dance between Aquarius and Leo, the people opposing the establishment, and that storyline is going to continue. I talked about this in the today's newsletter. I talked about next year how that's going to escalate. Next year, we're gonna Jupiter's going to go into Leo and oppose Pluto and Aquarius, and we're also going to get the nodes shift into Pluto and Aquarius. That means we'll get the eclipses in those signs, so that will hella supercharge this whole theme of the collective versus the establishment, people versus the establishment. It's quite the time to be alive.
I would really like to live in precedented times for once.
Yeah.
I
Oh,
was thinking
precedented
about that the
times.
other day.
Yeah,
um,
you should read my newsletter. I gave a after I talked about everything. I talked about like why I'm so hopeful and optimistic though, because it's like it's almost like the spiritual context of it is like our souls chose to be here at this time. Like it's like we are here for a reason. And so it's like I talked about the more that you know that reason of why you're here right now to experience all this, the more you're in alignment with like the wealthiest version of yourself, the most abundant version of yourself. So we are here for a reason.
mhm.
So it's applying. Yeah, there is also the fall. There's so much water, which is so much like feelings and emotion, but also kind of that intuition and that applying meaning to what you can't see and all the spirituality. I was talking about like the amount of like conversations I've had this year about like spirituality and God. It's like on another level. And yeah, you can think like all this water influence, which we'll be getting more of throughout the next month or so. Today's the first day of Scorpio season, which is a water sign. So the next month or so will be pretty watery. Get ready to feel the feels. But there's a lot of support too, so
Mhm.
it's good. It's
Yeah,
like it feels like a therapy session, but like one of those really good ones where you like let it all out and then you feel really good about it after.
that's actually my feeling about where the market's going to shake out as well. I mean, I don't know. I can't predict the future. But my suspicion is that this stuff that we're experiencing right now, when I was texting you about like, oh, look, another bank decided to write stuff off and another lender just went under. It's
Hmm.
clearing out all
Exactly.
the bad from the system. The system is trying to flush out and trying to heal,
Exactly.
and we're going to get back to a normal. Um,
Exactly.
but
Reestablish a
if you,
baseline.
yeah, if you look at like, I hate to use this as an example, but I saw it earlier this year. iPhone prices are a great example where people are like, how come iPhones are getting more expensive? Well, it's because they're adding new technology, so it adds more value. But the market drives it to equilibrium
Exactly.
every time.
Exactly. The reason why it's so high is because people are buying it. If people didn't buy it at that price, they would lower the price.
Yes. So, and the markets will do that. We're going to get through. My suspicion is earnings season is not going to go well the rest of this month for banking, but it is going to be good for the rest of us. So,
Yeah. Interesting dichotomy. But all right. Pleasure to talk to you today. We'll talk again very soon.
yes, we
Have a
will.
good October and Scorpio season, everyone.
Talk to you later. Bye
Bye.
bye.